The G20 finance ministers and central bank governors meeting has wrapped up in Washington, and Korea's top policymakers were there too to discuss pending economic issues. In an interview with reporters, Korea's finance chief said that Seoul will soon decide on how and to what degree it will open up about its interventions in the foreign exchange market. This is part of efforts to boost transparency and to put rest concerns of South Korea being a currency manipulator, Kim Min-ji reports.
South Korea is considering disclosing details about its foreign exchange transactions in a gradual manner, though, to ensure a soft landing. That's according to Seoul's finance chief Kim Dong-yeon, speaking to reporters following the G20 finance ministers and central bankers meeting in Washington. There have been growing calls for the country to be more transparent about its interventions in the foreign exchange market, with the U.S. threatening to label Seoul a currency manipulator. South Korea is the only country in the OECD that does not publicly disclose its currency market transactions. An announcement is likely next month on how Seoul plans to do that, and it's widely expected that it will release records on a quarterly or yearly basis.
The decision will be made based on the situation in our economy, the structure and the maturity of our foreign exchange market, and examples in other countries.
In a separate interview, Bank of Korea Governor Lee Ju-yeol, who was also in Washington, said that employment is a key factor when setting the country's monetary policy. He said although the rate doesn't impact employment directly, it's an important factor to be considered when looking at the overall economy. Citing recent data which showed only a meager increase in jobs, he said structural reforms are urgent and that fiscal measures are important when the economy is in the doldrums. He was likely referring to the government's $3.7 billion extra budget bill that was supposed to be used for job creation, but is still sitting in Parliament due to a standoff there. When asked about the normalization of interest rates among major economies, he said that the U.S. will likely maintain its stance of gradual hikes this year, but added that it's unlikely to lead to a massive capital outflow from Seoul. Kim Min-ji, Arirang News.